Thank you, Mr. Rabi', for wonderful talk and presentation. Now we're going to our third panel of today. That will be Gulf FinTech slowing down or maturing. With me, joining me today will be Mr. Mohammad Al-Kharafi, Group Chief Operating Officer of National Bank of Kuwait. Mohammad oversees operation, technology, and strategy at one of the Gulf's leading banks, giving him a unique perspective on how fintech and traditional banking intersects. Mr. Mohammad, please join us. And also with us, Mr. Hasan Zainal, founder and managing partner of Arzan VC. Hasan has been investing in MENA startups for over a decade, and was an early backer of some of the region's biggest names, including Kareem and Zed. Mr. Hasan, please join us. And with us also, joining from Kingdom Saudi Arabia, Mr. Sultan Ghaznawi, Chairman and Managing Director of Scene Holding. Sultan is a serial entrepreneur and investor with a deep involvement in fintech, AI, and real estate, and has been instrumental in building new platforms and ventures across Saudi Arabia and beyond. Mr. Sultan, please. Shukran. Dear panelists, thank you for joining us today and for our third panel. And we have talked about capital, AI, health tech. Now we are coming to the money, where the money is. So I will be starting with a question for all, and then we'll be directing questions for each individual of you guys. We are seeing a very healthy concentration with capital flowing to the most mature ecosystems. Or are we creating a two-tier market where only Saudi and UAE startups can scale? I will start with you, Abu Badr.
Sure. Thank you, Khalid, and thank you for Jarida for hosting this great event. I'd say we're seeing healthy concentration, but not exclusion. I mean, capital naturally flows towards scale and policy speed, but the rest of the region isn't left out. I mean, in Kuwait, we're seeing healthy stride from the Central Bank of Kuwait with the regulatory sandbox, with rules and regulation being easier to encourage fintechs and startups to open. And I think, as Karthik alluded to this morning, regional interoperability is getting easier. So what's good, I think, for part of the region is good for the entire region.
And the same question, Hasan. But keeping in mind that fintechs have raised nearly 600 million across 93 deals in H1 2025. What's your take on this question?
I think, first of all, thank you very much for inviting us to join you in this panel. I think we're looking at the progress of fintech in general in the GCC and MENA. Things are progressing pretty good and pretty fast in some of the countries. There is definitely a focus on few of the countries, and we would like to see more development happening throughout the region. We would like to see a lot of changes towards more of a very connected region rather than a fragmented region. But again, I think the money flow that we've seen in the last few years, I think this is very positive for the region itself.
Yes. Sultan, welcome to Kuwait. It's a pleasure, and inshallah will be not the first time, only that will be first, and will be more to come. Sultan, matching the 2024 numbers in H1 in just 6 months, Saudi funding jumped from 276% to 270 million, and the UAE $1 million. The UAE rose 227 to 240 million. And together they captured 86% of the region fintech capital. What's your outtake, or what's your thoughts about this?
I mean, I think the numbers you've just mentioned, probably a large chunk of them were in few startups, rather than they were a large spray across multiple startups. This is one. Number two is, I think globally, not just regionally, we have moved from a state of euphoria in venture capital or fintech investments, and more specific, into a phase which I'd like to call survival of the fittest. Whether it was, two main factors in my views. One is the liquidity crunch globally, again, not locally. And so with that, add to it the red ocean state of most of fintech theses or themes. We've seen, I mean, if you talked about UAE or Saudi or even Bahrain or Kuwait, we've seen a lot of these mainstream fintech themes already being, penetrated by not just one or two or three, but rather dozens of players in the market. I can tell you in Saudi, the number of fintech companies have actually started to distort the ability of the retail investor to know which one to work with.
Oh, yeah.
And so I think the state of fintech in itself as an investment, from an investment point of view, is at the intersection of red ocean with liquidity crunch.
Yes.
And I think this is where survival of the fittest plays a huge role.
100%. 100%. Bubadr, MBK have done the biggest, let's say, M&A in the fintech sector by acquiring 51% of few payments, and in parallel rolled out 90% new mobile features last year. What the strategy signal here? When do you buy capability versus build it or partner with?
Yeah, that's a great question, Mohammad. Our strategy is quite simple. We build what is actually core to us, what defines us. We partner when innovation requires speed, and we buy where scale and regulatory fit makes sense. So in the example of mobile banking app, mobile banking for us is no longer something nice to have. It's our main product. It's our digital flagship. So especially in the retail world, people choose their banks based on the experience of the mobile banking app. So we keep that close to us. The U-Payments example, I mean, they were already doing great without us prior to our existence. And banks have historically, I would say, struggled in keeping up the high demand in that domain when it comes to payment. So partnering up or acquiring 51% made a lot of sense. We bring with us our scale, a little bit of corporate governance without disrupting or affecting their agility and innovation mindset. Yeah. So I wouldn't say we choose one or another. It's more about creating a platform that accommodates for both to thrive.
Amazing, amazing. And staying on that point, Hasan, to you. These acquisitions, does they validate the ecosystem, or do they risk killing innovation by absorbing most agile competitors from your point of view as a VC, let's say?
Yeah, I think if you look at the ecosystem, it starts by LPs putting money into funds, or let's say investors putting money into startups building a business, scaling, and then exiting. And when this exit happens, the money goes back to those LPs and investors. So for this to continue, an exit needs to happen. When the exit happens, the funds goes back to those LPs or investors, and then they would reinvest again. So the validation only happens when this full cycle is closed and exits happen. Nice. So I think definitely when we look at our ecosystem today, exits is the weakness of our ecosystem. And once this is covered and we see much more exits and IPOs, hopefully this would validate and create that much stronger ecosystem, and would attract basically investors from outside to put in more money into funds and invest in startups at a much bigger scale.
So we are talking about an economy, and we're talking about an ecosystem that is already matured, let's say, to have investors to invest money in it. So this question will be for you, Sultan. You backed Barq and Awad, each targeting a core part of financial stack, digital banking and investment infrastructure. Are we finally building infrastructure-grade fintechs in the MENA, or this is still an early stage or early bets?
I mean, I think investors are becoming more aware about the concept of a feature business, a product business, and an infrastructure business. I mean, a feature business, the exit of a feature business in the Middle East is extremely difficult simply because, in the GCC to be more specific, is extremely difficult simply because of the the user sample size. I mean, all of the GCC combined together, still it's a small market size compared to the world. And so if you're a feature business, whether you were SaaS or whatever, you would want to capture a global market. And those we want to see more of. Given that we've seen less of those, then the opportunity, and maybe that taps into the previous question of exits as well, then the opportunity is really in infrastructure financial technology companies. And if you look at Berg, I mean, we were lucky to be the founding investor of Berg and follow that journey. And actually last week, Visa awarded us the fastest fintech going in the world. The reason being is that they've understood the concept of not just a mobile app for the bank, but a hyper-personalized experience for every customer. And so the first 1 million users were in 21 days. I've been getting so many questions. How did you get to 10 million in 14 months and 1 million in 21 days? It's always the same answer. 3 T's: technology, team, and timing. Timing-wise, is because another player came before that and spent the larger amount of money to educate the market about the product itself, which is STC Bank in this case. The second one, which is team. I mean, what I really love, I mean, we invest in other sectors, but our concentration is in fintech. What I really love about fintech is a regulatory barrier to entry.
Yeah.
Right? You can, somebody who is a good chef can never go and open, a financial technology company. But somebody who's good in who's a banker, can go and open a restaurant. Just to give you a bit of what I mean by, there is a knowledge requirement to actually operate within the financial service ecosystem. There is a regulatory barrier that you need to, to be fit to actually operate within that. And so, if you look at these things together, Berg had and Awa'id similarly had the right team. So Ahmed, second-time founder, veteran within the financial ecosystem, timing, the team, the timing, which is after the product was already, verified in the market. And then the final thing is technology. I think if you look at, I'm not going to mention which company is that, but a company that started before Berg had to spend about 240 million Saudi riyal on servers, simply because the cloud infrastructure was not there in Saudi. When we started Berg, there was Google Cloud, there was Alibaba Cloud, now AWS, Amazon Web Services are coming now to Saudi, and so that cost was completely thrown out. We did not have to spend that budget. And so when these 3 things connect, I think this is where you have the opportunity to scale these financial infrastructure startups.
Yes, 100% agree. And going back to a bank perspective, and we are focusing now on 3, let's say, bullet points Sultan have been highlighted, that the market size, the need for a global market to integrate more, and focusing on team, tech, timing. For now, for banks as MBK, are you waiting for fintechs to burn the VC money to acquire them and to acquire more customers and then you are acquiring them? Or you are looking for winners at a discount to have it cheaper as a startup from your point of view?
I think that, that does sound like a tempting strategy. That's not how healthy ecosystems are built. At the end, we're a bank, we're not a VC, we're not an incubator. We don't deliberately look for opportunistic acquisitions. We invest and follow that brings value to us and to our customers. And while I fully agree on the survivor of the fittest, I think healthy consolidation is also part of that journey. I can think of several examples where a company started as a startup, as a fintech, that grew up to be something quite large, and we've acquired services or products from them, and they're paying off very well. So I think it's focusing on where the value is for us.
Okay. Does AI come with
I would totally agree. So Jamie Dimon last week in FII said JP Morgan is just a large fintech company. Yeah. So even banks are operating within that premise. And consolidation is certainly one of the major ways.
Yeah. Continuing the questions, also for you, Abu Badr. Is AI adding a benefit, or let's say building up more stakes or services that you are looking for as a bank?
Yeah,
in
oh,
the
definitely,
FinTechs?
definitely. I think from all the presentations this morning and everything we're seeing, especially with JP Morgan, there are incredible use cases when it comes to AI on KYC, on onboarding, on fraud control. It is an abundance of great services at scale.
Yes.
It's definitely the revolutionary technology that will really change banks.
Yes. Hasan, Jassim, and just going back to the same question, let's say, or the same information, that $6 million have been invested across 93 deals in H1. Does this like a healthy pipeline, or it's a missing middle where the Series A and B companies struggle to scale? And what is needed to be happen for FinTechs here to consistently break past the 1 billion mark?
Yeah, I think I think it's around 4-point-something billion for the last 9 months.
9 months, yes.
That's, I think, including all sectors.
Yes.
Most of this, or let's say a little bit less than half of this, was basically debt financing.
Yes.
In September, Tamara raised around 2.4 billion in debt.
Yes.
You have Lendo, you have Tabi, you have a lot of other businesses that are in the fintech field raising debt financing for embedded finance products.
Yes.
Now, is this healthy? It's much healthier than what we've seen in 2023 and 2024. I think the appetite is coming back again. If you look at the global market, for example, we've talked about Tabi, Lendo, and all of that. A comparable company would be Klarna or Affirm. Affirm is a company that got listed in 2023. Their market value dropped by, I think, maybe 60%?
6%.
60%.
Yes.
But you see their stock is going up again. And we're seeing a lot of comparable companies from the region, their values are growing. So I think now when it comes to 2025, I think the funding and the diverse way of funding those startups is pretty healthy. But again, most of this is been given to specific startups, such as Tamara, Tabi, the ones who are already who scaled and proved that they're basically growing. It's tough for them to go bankrupt like the smaller companies. Now, my issue here is the following. I think we've seen the focus of the support. I mean, there's a difference. There's difference between one country to the other, and there is a reason why all of the or most of the 4 billion that was invested lately was from foreign investors, right? Now the question is, why can't we have local investors putting that size, the big ticket size, and making basically their own investors more money? I think local investors' appetite to invest is still not mature enough, yeah? And it's very different from one country till the other. And I believe, I cannot tell you this is 100% healthy. I think we need to ensure that this pipeline of new startups and new ideas is continuously being funded and given the chance to basically expand and scale throughout the region. For this to happen, there are a few things that needs to really be considered very fast and by the regulators. One is we need to have the GCC passporting. Yeah? So basically, different countries should recognize the licenses that are given by other countries.
Yes.
The second thing that needs to be also looked at is standardizing the framework of, for example, cybersecurity or compliance, so that you don't need to invest with the same, let's say, back office in every single country you're operating in the GCC, within the GCC. A third would be, for example, KYC rails, where you can connect to through APIs, you can connect to different regulatory authorities in the different regions and be able to get the data of whether it's a customer or a business. If we're able to have those intact, what will happen is, one, your local businesses will be much bigger. They will be able to really scale and achieve size. And they might be the acquirer of an international investor, of an international, let's say, player in Europe and the States, rather than being acquired by international investors. I would like to see local players really becoming scalable and being able to compete in more developed markets.
Sultan, on this point, because I think what we will be answering now, it will be our next topic that I will be directing to Mohammed. But let's say, foreseen for yourself. Hasan have mentioned that we need to invest more in scalable fintechs, and we have a pipeline that he sees as a healthy, that is in a way that will impact in a good way in the ecosystem that is there. Foreseen, you have issued checks for 500K and then 5 million. So for you, it is the quality of the founder, it's the quality of the tech, it's the AI, or it's you are backing the early stages, let's say startups.
May I just comment on the previous answer? Just 2 insights from what Hasan said, is that the majority of the capital that you've mentioned that was deployed in Q1 went to few deals.
Yes.
Rather than to the larger ecosystem. And then those deals themselves, right? If you look at the structure of some of those deals, the founder preferred to take venture debt instead of equity, which tells you that he was, because you know, you have those few good deals now in the Middle East that have passed the barrier of breaking, as if you may, right? And then those guys, once they reach that and they know that they have this certain market size and market penetration, market, you know, control, if you may, which is healthy or not, that's a different question. They decided that I no longer want to give away equity.
Yeah.
It's cheaper for me as a founder to take venture debt, and it's less risky for me as I'm a holding company, I'm not a VC, but it's less risky for me as a venture capital or a private credit provider or a venture debt provider to give you venture debt at an annualized, whatever rate, 15, 18%, 20%, right?
Yes.
Than to give you equity. And if we see more of that, then you'll see more barrier to entry to enter these good deals, because founders are going to be more keen to take more venture debt because they know that my equity is going to be way more worth in 2 years' time. So I'll sell, you know, a much lesser amount of equity to pay off the venture debt in 2 years' time. Is this healthy? I'm not sure, but this is truly what the few deals that are controlling every story of every summit of every conference within financial technologies is talking about. So maybe those 2 insights could be important for people to look at what to invest in or not. Back to your question,
yes.
how do we decide where to invest that and where to invest that? Usually, so again, we invest our own balance sheet, right? We don't operate funds. And so usually our minimum ticket is $1 million and above. And what we do is we act as a founding investor. So we usually take on the full first round, second round, up to Series B or so, once it becomes really, really mature. What I can tell you is it's always the people, not the companies. It's always the founders. It's never the companies. And maybe when it comes to fintech more specifically, because it's a heavily regulated market, it's those founders who start their companies as a startup, but they behave like institutions. And they don't take regulation as something I'm going to have to do, but it's something of the core of what we are building. And what we are, you know, they've already worked on the compliance and cybersecurity and the application way before they thought about raising money, because they know that they have the right credentials, know-how, operational expertise to raise money. But what is most valuable about them is their ability to understand how to deal with the regulator, how to deal with the third-party partners, because the financial service ecosystem is an integrated market. I'm sure Mohammad can tell you more about how many strategic, you know, suppliers and vendors and core banking systems providers and what have you that they had to integrate with before being able to even go live. And so this ecosystem of financial services, your ability to comprehend how to navigate through it and then think about fundraising, just is obvious between the founder who understands that and the founder who doesn't understand that.
Yeah, and coming to you, Mohammed, on this one. Based on what we have heard now from the gentleman, looking forward 12, 18 months in the future, what are the capabilities in FinTechs that you are looking for to partner rather than to build inside, in-house? Open APIs, onboarding, KYC, lending, open banking. What are the, not open banking, let's say, just keep it outside. The risk collection, what the thoughts based on what we have heard now from the ecosystem, from the regulation, from the founder's perspective? That's my time.
I think all of the above, definitely. I mean, without limiting ourselves to a specific domain, I think it's definitely something that will have to do, that will take advantage of this AI enablement, that will take advantage of this cloud services. I think the foundation, the infrastructure, it is being built. Regulation is becoming more accommodative for such more transformational changes. And it's a matter of where to focus. I think, to Sultan's point, I mean, it's important to find what you're good at, but it's also important to be able to pivot, because there will be people that will compete to provide the same service. A small portion of them will succeed, will excel, and then the rest will have to look for other things to do. And then when this becomes, let's say, less popular and now there's a better way of doing things, people will need to learn how to pivot and move fast, basically.
Yes. Hasan, just a thought just came to my mind at the moment. We put aside open banking. So what are, from a perspective of VC, talking to a regulator, let's say, what are the needed technologies, FinTechs, that you are looking for as a VC here in Kuwait to spend money to invest in, from your perspective?
Open banking.
So
I think as a regulator, we need to, first of all, we need to look at, we need to have a mission, or let's say a vision that we need to achieve, right? So if you look at Saudi, for example, SAMA started in 2018. They've graduated around 60 startups. Today, one of those startups are raising hundreds of millions. Yeah. That's a huge success for Saudi, right? UAE, we're also seeing the same thing. Bahrain, we're also seeing the same thing, although it's a very small market. In Kuwait, I don't know how many startups have graduated, honestly, from the central bank sandbox. I hope to see much more. We've seen frameworks being announced 5 years ago, but we haven't seen anything coming out from that. And for me, I think this is very disappointing. I think, I mean, for Kuwait, it should be very easy. Why is it very easy? Because we're already laggers. And since we are laggers, then we know what's working in other markets. Yeah. We just need that technology in our market. Yes. So start with the basics. Yeah, whether it's BNPL, whether it's, which they just, we have, I think DIMA.
DIMA, yes.
Yeah, so we have basics that we require for any FinTech to really operate and be able to scale. I hope I've answered the question, but my main thing about Kuwait is this. You have huge talents. You have a lot of people who want to create something, but they're always blocked by regulators. Yeah. And maybe if the reason was we need security, we need to ensure that we secure consumers' money when it comes to FinTech, I think that can be handled in a way within the sandbox. I would like to see more of, let's say, innovation being happened and supported by regulators. Yeah. So we can see Kuwaiti companies going to Saudi and other regions rather than starting from Saudi and hoping to enter back to their own country.
Yes. Cutting the long journey and starting from where the ecosystem will be adapting more easily, I think, for the technology.
Just one more thing. We see a lot of the startups that also we've invested in. مثلا, one of the startups got listed in NASDAQ. Dubai, basically, Burj Al Arab, basically it had the picture of the founder. Yeah. They're very, let's say, supportive, and also they're very happy about this. So we need to see those startups. We were very happy about Talabat.
Yes.
We were very happy about Carriage, but that was done by themselves, right? Now, when it comes to FinTech, no founder can do anything if there is no regulation that supports it.
100%. I agree. More. And going back to Sultan, AI. So if we are talking about AI from CM perspective, what are the thoughts in your mind? Just let me phrase the question again. So you have Ibra, if I'm saying the name right, right?
I'll tell you what I think about AI in general.
Yes.
Okay.
Because I know VCs doesn't like anything with AI.
No.
So yeah.
Look, we like what makes money, right? Seriously. What makes money today is being data first. That's what matters today about AI. Now, what you do with data, depending on the maturity of the AI technology, is going to be completely different based on the timing. Because today, if you have the right set of data, you can use AI to improve efficiency, which is the gimmicky AI stuff that are today available. But there was an article on Bloomberg, actually a couple of days ago, that was saying the big tech giants around the world are using AI to cut tens of thousands of jobs. In reality, the amount of impact for AI on their bottom line, comparing to amount of jobs that they're cutting off, there's no equilibrium here. هي علاقة عندنا في بالعرب يقول علاق يعني في literally طبعا أكيد مو بنتهم.
لا أنا حاتي إذا قلت حق جيمي دايما الأسبوع.
والله exactly because 14,000 jobs here and 17,000 jobs here. So AI is also being used sometimes in a really kind of political tool, right? But now back to what we have done and what we've invested in. In terms of efficiency, here is an example. The company you've mentioned, Ibra AI, it does AI debt collection. So one of the clients is a telecom company that we signed with. They have 24 different 24 different debt collectors, all of them traditional. We were the first one that came and did AI debt collection. And what is AI debt collection? It's just a conversational layer. It's literally a conversational layer that talks to the person, and AI talks to you. So it's the amount of sophistication within the technology is not super wow, right? It's just first mover advantage, better access to data, better regulatory environment, and so on. But the impact was 7% higher in debt collection in the first 2 months than the next traditional debt collector, and 4,500% higher than the last debt collector within the same client base. No. And so in efficiency, it has a major impact. Now, another example is Yasmin AI, which I think we did together as well. We both invested in. In embedded insurance, your ability to basically tackle through different partners, because embedded insurance is the concept of working with multiple insurers, but also being embedded within the merchant rather than the ta'minis, which is a third-party aggregator. The ability to navigate multifaceted models to come up with an answer, which is the price of the policy, is much faster to come out with AI. Again, it's efficiency. Customer service is another one, which we've done that and to reduce the speed of reply time. But in reality, it's all still feature businesses. AI is today a feature business. What will become important, I think, which is not our game, to be honest. I don't think it's the Arabs' games at the moment to build, AI infrastructure like LLMs or chipsets. I don't think that's something that we're going to be good at, to be honest. That's not where the opportunity for us is at. And so the real race of AI, core AI, is not a race that we are racing in at the moment. Yeah. We're just playing with the feature components of that. Once that reaches maturity, this is where we can look at a listed company and say, you know what, I'm gonna I'm going to make sure that this company is not in the stock market in 5 years' time because I'm going to build the same company, but with an all AI infrastructure, operations, and even controls. It's not there yet. The technology is not there yet. But once it's there, which is, I think it's a 3 to 7 years window, depending on how fast is the UAE in building Stargate and how Saudis and what AI is doing and what have you. And by the way, Rabi' Khouri was on the stage talking about the open source LLMs like Llama, and I think in 3 years' time, none of those will be open source. I think they're all going to be closed source.
Yeah.
I think they're open source right now for a short period to capture data, to have their models go through the machine learning process, but I don't think they're going to stay open source for a while, and this is what you need to prepare for. And this is where I think the barrier to entry becomes really close, and this is where you can really create major companies.
Amazing idea, and I can see where you're going with that thought, and it's amazing. It's a question for, sorry. So last question for us, sorry, and won't take it long. If we are shifting, focusing on a consumer fintech, just one question. Imagine a new fintech coming in the market for 3 and 5 years. How can we exit? The proper way for exit, IPO, international player to acquire another area, another way, who better?
I think definitely not the expert. I'm the incumbent out of the group, but I would say there is definitely appetite when it comes from foreign investors. There is definitely appetite for people to explore from within. And I think where there is value, there will be definitely a lot of opportunities for exit. I think the challenge is on creating value, not as the end journey.
Thank you. Hasan.
I think we need to have not one exit strategy. It should be several, and whatever you've mentioned needs to be an option, whether it's an IPO in local markets, which we're seeing a good uptake there. Right now in Saudi, we're seeing about Boursa Al-Kuwait basically is trying to have some initiatives to create this. I hope we see more IPOs in the region. Otherwise, secondaries, strategic sale is also always an option.
Sultan.
You know, I think it's the era of burn money and grow is dead. Now it's all about building profitable businesses. And if you build profitable businesses, doesn't matter where you exit. You just build the business. Why are we talking about exits in technology as if it's something that is an important matter? No, it's just the same thing with every business. Build a profitable business, whether it's tech or not. If it's profitable, then you can exit. He will buy it from you. The IPO market will buy it for you. A private placement investor will buy it from you. And so if you link that with the concept of entrepreneurship, I think entrepreneurship and the entrepreneur, and I'll close with that, has been redefined. It used to say, if you're an entrepreneur, then you are innovating. For me, if you're an entrepreneur, then you are executing. And if you're executing, then you're reaching the rational KPIs, and then exit becomes possible across multiple routes.
Amazing, and thank you very much, gentlemen. I appreciate your thoughts and your thinking forward words also. And it was, I think, really appreciating for me also to be having you as our panelists and speakers. Dear guests and attendees, thank you very much. And we will have a 20-minute break now. After the break, we will have a keynote with Mr. Fahid Al-Sharikh, CEO of Tech Invest, who will be speaking on the AI bubble. Then we have a panel on the next leap for PropTech in the Gulf. And after that, a keynote in the Gulf by NVIDIA, Ahmed Mustafa. Thank you very much, and applause for our speakers. Thank you.